Okay, what is up, people? Welcome back to another stream. Hope everyone is doing well, and hope everyone's doing well. Like always, guys, make sure you do drop a like and subscribe if you are enjoying the content on the channel. It really does help out, and make sure you hit the bell as well so you don't miss out on any streams or uploads in the future. If you haven't done already, check out the Telegram channel, link in the description to that. I share my updates, trades, watch list, videos I create. So if you want to stay in that loop, make sure you go check it out, link in the description. And also, if you are looking for a broker, I do have my affiliate link to IC Markets. Feel free to check them out if you are looking for a broker using the link if you want to. But yeah, guys, welcome back to another stream. Hope everyone is well. Umar, flames to you too. What is up? Hope you're doing good. Andreas, what is up? Morning. Anus, good morning. Welcome to the stream, bro. Maru, welcome to the stream. Good morning. A Sculpey TFX, hope you're doing good, bro. Welcome to the stream. Amrit. Gold, yeah, we'll take a look. FX Wolf, good morning. What is up? Hope you're doing good. Take a look out. Pound yen, euro yen. Okay. Yeah, the yen pairs have gained some strength. They are starting to look interesting. Again, breaking through some key areas. I will touch on the yen pairs shortly. Let me just go take a look at gold first, and then I'll go through some of the yen pairs, but they are starting to look interesting, I do have to admit. But yeah, gold's been very bullish. We do have CPI Did we have FOMC yesterday? No, we didn't. I have no idea. I think it's today. My memory's a little bit messed up right now. Is it today or tomorrow? No, it was yesterday, was it? Yesterday. Bear with me 1 second. Yeah, it was yesterday. Funny. Didn't see too much to happen really in the markets from the FOMC minutes. Don't normally do anyway. Anyway, but we do have CPI later today, which is at 1:30, so that could be interesting. But yeah, gold's been very, very bullish. Gold's been very bullish over the past kind of few days here, and again, in reference to the big move we had to the downside, it's only done about 50% of that move. If I put a fib from the high to the low, so you can see we've just come back into 50%. So in the grand scheme of things, you know, the market has been incredibly bearish for quite a few days, and now I'm still anticipating this as retracement. We have come back and we tested a pretty key level here at 1810. So we've had a pretty nice bounce from that. But in terms of my bias, in terms of what I'm looking to do with gold, it's still definitely looking to short it, looking to anticipate more downside. It's pretty aggressive retracement, I have to say. But nonetheless, in terms of what I'm looking for price to do next, I am still expecting price to head to the downside. Of course, we'll see how price reacts with this area. Same thing with silver as well, not too far away from my zone with silver as well, around 22.4, 22.5. I'm looking to short. Not necessarily both of them, just whichever gives me the better price action, but we're both coming into some nice areas. So I do think gold's next big move is likely to the downside. We're going to see how price reacts with here, because again, I'm not trying to call a top on this move here. Essentially, I want to see some evidence the market is struggling, the market's forming a lower high, and that's when I'll start looking to jump in. Likewise with silver as well. But I am bearish on gold, bearish on silver, looking for another move to the downside. They're coming to some key areas just below 1890. Intraday is still pretty bullish. Market's still pushing to the upside, higher highs and higher lows. I feel like CPI is going to be a little bit of a pivotal event in terms of the direction for this one. But in terms of the technicals, I do favor more downside once we start seeing the price action necessary for trades and confirmations. But at the moment, everything is still showing bullish momentum, still showing intraday bullish momentum, price still creating higher highs. So I would be careful about jumping into any shorts at the moment until we start to see some development in these areas here. But I'm waiting for some short for gold, waiting for some short for silver. Again, like I said at the start of the week, I do prefer silver to gold. So this is kind of the market I'm focusing on the most on. Again, most likely going to do the exact same move pretty much, but if I can get a test of this area with silver, that'd be fantastic. And looking for price to come back into where we came from, which is around 20.8. So that's kind of my thesis, the plan I've got for silver, and looking to capitalize on another move back down again. And I expect gold to follow as well. Let me know if you're looking at something similar for gold. I'll go take a look at the yen pairs. Gareth, what is up? Welcome to the stream. Hope you're doing good. It was yesterday. Thank you for letting me know. Anus, I think the upside move on euro will end today after CPI. Potentially. Again, it's always most of the time it's the news events that are kind of the pivotal times where the market kind of sets its direction. We see that a lot with NFP, CPI, inflation, interest rate decisions. You know, we do see a lot of that happen. So I wouldn't be too shocked if we do see that happen today with the dollar pairs in general. Because of course, if euro is going to change direction, most likely we'll see the rest of the dollar pairs follow suit as well. And we are coming into my areas of interest where I do expect to see some type of reaction. Again, it's still bearish on the pair long term, so I'm expecting for us to find resistance in these zones here and start heading to the downside. Again, not planning to jump into anything right now. Everything is still quite bullish. We're still kind of correctively moving higher. So there's nothing for me to do right now. And we'll probably do that until CPI happens. And then maybe do that and then we start trending down again. So it's kind of a waiting game a little bit. Again, in terms of what I want to do in the market, in terms of my my expectations in terms of my bias. That's pretty much all calculated. But in terms of finding an entry that of course fits my plan, there's nothing there yet. So I'm kind of just waiting for price to kind of just formulate something for me to actually take some trades. But at the moment, we're coming to a big zone, so we'll see what happens there. What's up, Big Mo? Welcome to the stream. I will go for the M-pairs in a second. Greetings from, how do I pronounce that again? Is it Osiek? Appreciate work. Appreciate you. Morgan Doug, what's up? Your mic is distorted. You should check the level is not too loud. Okay, let me double check that. It's the second day in a row. Hello. Hopefully that's better. Let me know if it's better. But yeah, I'm not really much of a tech guy, to be fair. Okay, so yeah, we'll go through the yen pairs in a second. Pound yen, euro yen. We'll go through some more as well. Maru, can you take a look at the DXY? Sure thing, we'll take a look. Emmanuel, NZUSD is already selling. I think I am in for a sell. I think as I'm in for a sell, okay. I mean, that would be nice as well if it was selling off because you're in a sell. We will take a look at NZUSD. Let me just go through the yen pairs quickly. Okay, so pound yen, we'll take a look at pound yen, euro yen. So yeah, we have seen a big break of structure here at 183. Is kind of what we've been anticipating since coming into the week. Because again, we had that big wick on the weekly time frame, which said to us that, okay, we're likely to see some continuation to the upside this week. We had a big wick not too long ago over here, and we've kind of got a repeat of that with this weekly candle for last week as well. So coming into the week, I'm looking for price to push back into this area here where all these wicks are at 185. So that's kind of where I'm looking for price to push into for pound yen going forward. Because again, everything is still pretty bullish. If we zoom out, the market has been bullish for quite a while now. So nothing's really changed from that front. So with a wick like this, it looks like the market is just testing some structure on the left and likely to print another higher low. So I do expect more upside for pound yen into this 185, 186 area. And now that we've just gone and broken through some structure on the left here, we're getting a strong indication that, you know, the likelihood is that market is gonna keep pushing to the upside. So coming back to test some structure here makes a lot of sense as well. You know, getting that next higher low in and then the continuation makes a lot of sense. And that's kind of the opportunity I'm looking at with pound yen. We have been printing these higher lows steadily, not the most obvious, but we have been doing so. And now that we've got that big break of structure, that's telling me that, okay, most likely pound yen is going to keep pushing to the upside. This could be the next big higher low of the market, and we're coming back to test resistance and maybe even some higher highs as well. So my verdict with a lot of the yen pairs, especially after some moves from last week, I'm seeing a lot of bullish momentum taking out some big highs. If you look at pound yen, Swiss yen, not quite euro yen yet, CAD yen, Aussie yen a little bit, but mainly pound yen, Swiss yen have been breaking through some big structures, and New Zealand JPY as well. But yeah, in terms of going forward with the yen pairs, I am definitely expecting some more upside. Andreas ADNSD will take a look as well. Still distorted, so that's not the problem. Yeah, I have no idea what the problem is then. Oh, it's too low. Okay, let me turn it back up again. It's because there's like a little red bar, so I'm not trying to get my voice to be in the red bit because I'm pretty sure that means too loud. But yeah, I have no idea what it might be then. What's up, Nak? I'm doing good. Hope you are well too. Silver and gold, can you have a look at? Explain it a bit. Thanks, much appreciated. Yeah, I just had a look at silver and gold a few minutes ago. If you scroll back a few minutes, you'll see my analysis to both of them. I'm waiting to short. If you're on Windows, check your audio mixer or the soft that you got with the mic. Check your audio mixer. Yeah, I don't know what that is, to be fair. I mean, I'll go check the audio. I mean, is it like what's describe it to you? What's wrong with the mic? Because like, is it an issue where you can't make out what I'm saying, or does it just sound weird? Because I have no idea what it could be. Wait, let me mute the mic and see what it sounds like on my phone. Okay, I think I know what you mean. It's like quite poppy maybe. I think maybe a mic cover might help with that. But in terms of like hearing me, I think you guys can actually hear what I'm saying. But yeah, maybe I need a mic cover on top, to be fair. Anyway, so yeah, I'll go take a look at Euro Yen as well. I haven't forgot. DXY, NZD/USD, AUD/NZD will take a look too. NZD CAD is still bullish. We'll have a look. See. It's okay now. Okay, decent. We can hear you. Just sounds weird. Okay. As long as you can hear me, and it's not like too bad. Croaky, like not clear as usual, is like a bad connection. It's a little distorted. Yeah, I have no idea why that would be, because it's not like I've done anything to the mic. But yeah, I'll probably go and test it out after the stream. As long as you can hear what I'm saying, I'm not talking to myself. I feel like we can still get through it, but yeah, I'm not very a technological expert, so I need to do some research or some YouTube videos about that. But anyway, let me go back to Euro Yen. So yeah, with the yen pairs, like I said, especially with pound yen and Swiss yen, they've broken the high quite substantially. So for those in particular, I do expect to see price come back to the highs there. Euro Yen, of course, with the rest of the yen pairs, they do make similar moves as well. So I do expect to see price probably eventually nestle back at the highs there at 159.686. However, we haven't broken through this big level of resistance where prices test this numerous times, 1, 2, 3, 4, and a fifth time at the moment. So if we can get the breaker structure there, I think it's a pretty clear setup of price coming back to the highs, almost 160. So which is a big psychological level. But yeah, in terms of the direction for Euro Yen, we had a very big sell-off, of course, for all the yen pairs. And the fact that price had that sell-off never show real much signs of continuation. You know, if we're going to fill the wick, normally we do that pretty soon after we get a big wick. The fact that price found support and started pushing up was always a bit of a red flag for the sellers. And now price is coming back to test that resistance. So with Euro Yen, we might see some type of reaction here. But I do expect us to sooner or later break through that area at 158.500. So there might be some short-term sells, but again, I'm not really a type of range bound market trader type of guy. So I'll be waiting to see if we can get our heads above that level, which I do expect us to do sooner or later. We might push down first, then break, or we might just break straight away. That'll of course be up to Euro Yen, but I do see us getting above that and coming back to test the highs and possibly hitting 160 as well. So yeah, Euro Yen going forward, I do expect a lot more upside. So yeah, looking across the board, yen pairs look bullish again to me. I mean, Aussie yen, big recovery there. Might see a correction before some more upsides. I mean, New Zealand yen almost came back to highs there. I wouldn't be surprised if you're going to take up the highs soonish. CAD yen, that one's still looking bullish as well, still printing higher lows as we can see. I wouldn't be surprised if we come back to 111. Euro yen we just discussed. Swiss yen as well, clean break of structure quite a while ago now. So if we can get some corrections, I'm expecting price to come back to the highs there on the left, possibly some new highs. Likewise with pound yen and of course New Zealand yen almost coming to the highs there. So yeah, going forward, I do think price is likely to create some new highs for probably the yen pairs in general. The yen looks pretty weak, structure looks up. So going forward, I'll be focusing on some pullbacks and continuations for the yen pairs. We'll take a look at SD CAD as well. It's a bit loud, like it's hitting a limiter or something, but it's okay overall. Okay, as long as you guys can hear me, that's the main thing I'm after. If it's a little bit distorted, a little bit weird, I try and sort that out for the next stream. But quite frankly, I have no idea what I'm doing with the audio. Really, kind of just messing around to see if it works or not. So yeah, not the best person to sort this out. Sir Pips a lot, love the name. I can hear you loud and clear, sir. That's good. Gaming scenario, what is up? Okay, so let me go take a look at which one was next. DXY, NZD, Aussie, New Zealand dollar, NZD CAD. Okay, so the DXY, as stated previously, we're looking at some correction at the moment. Everything is still pretty bullish with the DXY after price broke through the high there and broke through the high there as well. Going forward, I am looking at more upside, but of course with this, last week and the week before, we're firing some strong wicks to the upside. So it does look like price is finding not necessarily a top, but an area where we're likely to retrace from. It could be a top, but an area where we're likely to retrace from. So I am looking at price coming back to some of these areas on the left. 105,500, which are more or less coming into, and also this area here as well. These are the two areas I'm looking at from a DXY perspective, which are kind of very similar to areas in Euro USD, where price may hold and then potentially push to the upside. Same thing with this area here as well. So DXY longer term, again, still expecting more upside. We had an impressive break of structure to the upside, taking out these two highs. So now we're looking at a higher low. We've had like 11 consecutive bullish candles on the weekly chart. So we're likely to see at least some type of relief, some type of correction sooner or later, a bearish candle or doji of some sort. And we're kind of seeing that now. So I'm looking at these areas to push DXY back up again. But in terms of the longer term move, it's still pretty bullish for myself in terms of my analysis. So with the DXY, I'll keep an eye as price comes into these areas. As you can see, we've been pretty bearish all week. Euro USD showing the exact same thing as well. Price pretty consistent with all of these lower highs here. But we need to see some evidence that the market is actually looking to turn. And then we can expect price to start pushing. And maybe, like Agnes said before, maybe CPI could be the catalyst for that. So I would definitely keep an eye out to see what happens there with CPI. But in terms of the technicals, I am waiting for a bigger push higher. Again, not planning to jump into anything just yet. Nothing's quite set for me on Euro, Aussie dollar, all the dollar pairs. Nothing's quite set for me in terms of a setup. But the bias for me is still pretty clear. Same for like Aussie dollar as well. I'll touch New Zealand dollar now since I'm on the talking about the dollar anyway. New Zealand dollar seeing some downside. Again, price is struggling to break through the high here as well. Again, it's an interesting one because it's not clear in terms of structure. If anything is happening right now with NZD/USD, it's more or less consolidation. Really, we've got some equal highs roughly, equal lows roughly as well. The market hasn't really made any real progression since the start of since mid-August. We haven't really done anything in terms of creating a trend. The market's been moving sideways. Longer term, I'm still looking at price coming to the low here. If I zoom out to the weekly chart, everything is still pretty bearish. Consecutive lower highs, as we can see, 1, 2, 3, 4, 5, 6. Missed that one there. So the market has been pretty consistent with the lower highs. So I do see us coming back to this low here, but in the meantime, NZD/USD should just be moving sideways. So kind of waiting for a breakout. Maybe we break up first to come down. Maybe we should break to the downside. That's all up to NZD/USD itself, and we'll just hit the tripod there, and we'll make adjustments and react to what price is giving us. But at the moment, NZUSD in my book is just moving sideways. So I'm kind of just a bit more of a bystander with this one and waiting for price to kind of give me a bit more clarity. Last time we had a nice break of structure, so I was looking for a lower high for the market to keep going, but that never happened. And now price is back at that resistance again. So if we can come back down, possibly, I wouldn't be so surprised at that move kind of continuing the pattern of consolidation. If you can finally get a breakout, that'd be magnificent. And then I'll be expecting the market to drop. And we've got some lows there we can be shorting to as well. So longer term, I think there could be some nice trades on the cards of NZUSD, but at the moment we're kind of just ranging. So shorts do look okay up here. Price is failing to break through the high. If we continue the range, you can anticipate a swing back to the low of the range. That's a fairly probable move, so it makes sense. But it's just nothing that's really interesting me. It's not really a setup that I would go for myself. So with NZUSD, the best I can say is just market continue to consolidate, possibly another move back down to the low of the range. But in terms of actual setup, in terms of a trend, I'm still looking to follow that high time frame trend, but I need us outside that consolidation first. So that's kind of what I'll be waiting for going forward with NZUSD. Next, I'll go take a look at Aussie New Zealand dollar. Haven't looked at this one for a while now. I'm not really interested in this pair. It's just been very, very choppy. We have cleared some lows out here, but the market kind of overall is still moving sideways. So that's our high, that's our low. The market is still kind of just respecting both of these areas here. Possibly could see another push back up. So again, if you've been on my channel for a while now, you know that my main condition that I'm looking for in terms of the market is trending market conditions. So when the market is moving sideways, I'm very much sitting on the sidelines, being a bystander, not trying to get involved in the market, because that's not where my edge lies. So it doesn't make any sense for me to get involved. So when the market is moving sideways, in my personal trading, I'm very much just moving on to the next market or mapping out something that when we do get a breakout, maybe I'll be interested in. But even with NZUSD, if I scale to the highest time frames, even the weekly chart has just been in a big range as well. So there's kind of no overall trend that I'm trading here. With NZUSD, we had this bearish trend here. So even though the market's moving sideways on the lower time frames, it's not really too much of a big issue, because we can see with clarity where most likely the market is going to end up sooner or later. So the shorts make sense. Getting ready for the shorts makes sense. But with Aussie New Zealand dollar, AUD, this whole thing is just consolidation. Zoom out, then maybe we've got a bearish trend, but it's just too big to really factor into any trading decision. So with NZUSD, it's just kind of range and range and range. So if you're looking to trade this one, best thing to do is buy low, sell high. Coming back into the low around 1.05665, that makes sense for some buys around that part. At the moment, it looks like we've just broken through some structures, so we might be seeing a retest for some more continuation lower. So maybe something like that. There's a little bit of a trend there, I suppose, but quite frankly, I just don't like the pair. So I'll be looking at other pairs. But if you're looking at some shorter term, medium term opportunities, I do fancy some sells on the break and retest of 1.072. Then probably some buys later on if we can hold that same area. But yeah, definitely not a fan of the structure there at all with ADNZD. It's probably my least favorite pair. Yeah, it is my least favorite pair. I think ADNZD and probably Euro Swiss. Yeah, Euro Swiss, ADNZD, my least favorite pairs. Euro Pound's not far from that. It's a little bit better, but it's definitely not far from those two. Anyway, so I'll go through, I believe it was NZD CAD next. Yep, NZD CAD is still bullish. Okay, Pierre will take a look. Asim, what is up? Good morning. Can you take a look at New Zealand Swiss? Of course, no problem. Game scenario, when the market is sideways, we sit on the side. 100%. I mean, there's some people who take advantage of sideways moving markets. There's people who, look to trade and base their strategy around that, or have a strategy around that. Me, myself, I want to sit on the sidelines. Because again, in trending markets, it's just so much, well, from my opinion anyway, just so much easier to establish a bias, establish a trade idea, and be able to predict with some good accuracy of where the market could go next. Because if the trend's going to continue, then you can always expect the market to come back to its high if it's an uptrend, or always come back to its low if it's a bearish trend. So it makes sense to be expecting moves to happen. Of course, in ranging markets, you expect price to bounce from the high and bounce from the low, but typically ranging markets aren't always, they aren't always symmetrical. For instance, you're not always going to see a perfect ranging market, which is just, rejecting the high, rejecting the low, and just doing it, perfectly. There's going to be a lot of this, a lot of that happening, price breaking through a little bit, and then it's a kind of a messy structure. It's not very neat and tidy, and a lot of these moves here are just taking out traders who have got in before, and same thing vice versa. And it's just not clean. And sometimes you see price come halfway down before it decides it wants to come back up again. So it's a lot harder to predict. It's a lot harder to speculate of where the next move will be with ranging markets. Of course, you kind of just looking for price to hold the high and hold the low, but there's a lot more to that in terms of placing trades, in terms of getting stopped out with fake moves. Managing the trades a little bit more difficult. But with trending markets, if the trend's going to continue, you're always expecting price to always come back to the prior low or the prior high, depending on the trend. And of course, there will be times where price decides it wants to reverse and not continue. Of course, that's obviously a possibility too. But in terms of just coming up with ideas and expecting where the market to go, it just makes so much sense to focus on trending markets. It's just a lot easier, in my opinion. And of course, you've got all of that momentum, all of that order flow in your direction as well. When the market's moving sideways, buyers and sellers are kind of fighting each other and trying to come out on top. Whereas if you've got a bearish market or a bullish market, clearly the buyers or the sellers are in control of that market. So if you're buying in a bullish market, you've always got that kind of wind in your sails, and trades can go further. You're gonna experience a higher win rate than if you're just trading choppy markets all the time, because you do have that kind of edge from the trend. So there's just a lot of pros to trading trend markets, and not as many in my eyes anyway, trading sideways markets. So yeah, when it's sideways, just sit on the side. Anyway, so was it Aussie Swiss, New Zealand Swiss, but was there pair before that? Yes, there was NZD-CAD. So yeah, NZD-CAD, someone asked if it's still bullish. So NZD-CAD, okay, that's a nice move to the downside there. Is it still bullish? Possibly. I mean, I would still kind of consider it bullish because it hasn't taken out this low. But would I want to buy it? That's a different question. Because again, longer term, I'm pretty bearish on NZD-CAD. I was actually looking for a bigger push to the upside this week for us to come back and test that low there. We've got all these lower highs. Let me draw that a little bit bigger so we can all see. So we've got all these lower highs here, 1, 2, 3, 4, 5. I was looking for price to come a little bit higher this week from this area, and then again another sell-off, just completing the pattern, or repeating the pattern, I should say. But yeah, I'm not too sure if we'll get there anymore. And I say that because price has been pretty corrective moving up, and now we're seeing some strong momentum coming back down again. And especially if we take out this low, I would not be expecting price to suddenly push back into that high there either. So yeah, with NZD-CAD, I would still say it is bullish based on this structure here, but I would obviously be careful because I'm still deeming this to be counter trend structure and sells to be pro trend. So I would be a little bit careful with the buys in terms of looking to stretch them in terms of how long you're holding on to the trade, because the sellers on the higher time frames are still in control of the market, and if they succeed, we're coming back down to the lows and possibly these lows here eventually. So I would be careful from that standpoint. But in terms of just looking at the 4H structure, yes, I would still say it's bullish because we haven't really broken any significant structure yet. I would say anyway. So I would still say it's bullish, but yeah, I was expecting price to hold this area here last week. It didn't. It failed. It broke to the downside. So I wouldn't be looking to buy it at the moment. Maybe we're just having a deeper retracement, but because it's so corrective and the fact that it's counter trend, I'd rather wait to see if we do push up and then look for some sells higher up, or just wait for us to break through some structure, then catch the sells on the way down and kind of follow that trend there. Both of those opportunities would be some really nice pro trend opportunities with the higher time frame. But yeah, I would still say it's bullish on the full H at least, to answer your question. Okay, so we'll take a look at New Zealand Swiss next. Okay, I'll go back, mate, and yeah, I'm doing fantastic, thanks. No problem. Any other pairs you want me to take a look at, feel free to drop it down in the chat. Game scenario, I've realized that only way to increase your accuracy is taking less trades. It's more about what trades you don't take, less about what trades you do, what trades you take. What do you think, bro? I would have to agree 100% gaming scenario. There's a reason why. I think was it you that mentioned that profitable or the most successful prop firm traders, they take like 3 to 10 trades a month or something like that. But yeah, I mean, if you think about it, the less you're in the market, the more accurate you can be, the more precise you can be, the less you are in the market. If you're always in the market, you're always going to be exposed to market fluctuations, the market uncertainty, because no one knows where the market's going to go with certainty. We're all speculating, we're all using strategies, we're all using confluences and whatnot. So the more you are in the market, the more you're exposed to the uncertainty of it. So even if you are trying to be, very precise and very accurate with your trades, the more you take trades, no matter how good of a trader you are, you will do more harm than good in the long run. So the best way to be more precise, increase your win rate, even increase your risk to reward as well, if you're waiting for the right time, it's always looking to be patient and trade less. I think everyone can go through all of their trades over the past few months, past year, and kind of, instead of just looking at, okay, what trade should I take with these trades, what trades shouldn't I have taken. If you look at over your sample of trades, and I bet people can probably get rid of maybe 20, 30, 40, maybe even 50% of the trades they did take, and just keep the other 50%, which were actually good trades that fit the plan well, which had right confluences, good entry signal, were at good location, and just stick with those 50% and lose the other 50. If you lost the other 50, you probably would be in a better place with your P&L, and of course in terms of your metrics as well, because if you're achieving similar results but taking half the trades, that means your risk of ruin is literally halved. The amount of drawdown you experience will be less as well, because you're taking less trades. The efficiency of your system will improve, the profit factor will improve as well. So there's so much upside of doing less and being more precise with what you have. So that's why I'm a big preacher of having a trading plan, having a system that you follow, but being able to use discretion to understand which are the best setups, the quote unquote 8+ setups for your system, because everyone will have trades which will fit the plan, but objectively you can look at that trade and be like, it doesn't really look right. Maybe it's going against some higher time frame trend, or maybe it's coming into a big level of resistance and you're buying into that, or maybe we're seeing a lot of rejection there and you're looking to buy into this. So there's little things here and there which might mean that the trade is not high quality, and there will be some trades where you take which fits your plan well and you're like, this is a fantastic trade, it's almost perfect, everything's lining up very nicely, and those are the trades you want to be taking day in, day out. Well, they won't appear every day, but whenever they do appear, you want to take them. And of course they won't work all the time, they will still fail, but in terms of the success rate, it will be higher than the ones that do fit your plan as well, but they just don't have that extra confidence. They just in a rough spot. You come in arm and in about the trade a little bit as well. Those are the trades you just kind of want to get rid of and not really take in your system, which is difficult to do it completely, because at the end of the day, you want to make sure you're playing out your probabilities and just taking the trades that fit your plan, but you want to make sure you're focusing on the best quality positions and anything that's subpar, low quality, you just kind of erasing. But yeah, I 100% agree. If a lot of people just lost good 20, 30, 40, maybe even 50% of their trades, they're probably in a better off place with their P&L. And like I said, so many metrics about their trading would have improved drastically as well by doing less with their trades and focusing on the best quality setups. But yeah, I would have to 100% agree with that statement. A lot of the time when I was going through my data and I was trying to go from that unprofitable to that profitable stage, there was many times where I just figured that instead of trying to decipher the market and understand what the market's going to do next, the best thing for me was just to reduce the amount of trades I was taking. Not just reduce, because there's two ways you can look at it. You can reduce the trades you take, which is just take less trades, but it's not really that. It's taking the trades that are not worth your time, really, which will then mean reducing your trades, because you can still take subpar trades and you can still take less trades at the same time. If you're still taking subpar trades, then there's no point of taking less trades, is there? So you need to make sure that when you are taking less trades, you're kind of making sure you're taking the best quality setups. And because you're only taking the best quality setups means you take less trades as an effect, as a consequence of that. It's not because you're taking less trades that your results get better. It's because you're only focusing on the best trades. That's why you take less. So when I was looking for myself to improve my P&L, improve my equity curve, a lot of the time I was just looking at trades like, did I need to take that trade? No. Did I need to take that trade? No. Did I need to take that trade? No. A lot of the time there was just so many poor quality setups I just didn't need to take, but I felt I had to take because I feel like I need to do something, get in the market to make money. You can't make money sitting on the sidelines, but you can definitely lose money being in the market anyway. So you can't lose money if you're on the sidelines. But I 100% agree with that statement. Okay, so NZDC Chef, will take a look. Where is it? There we are. So NZDC Chef, I do like this one. Again, Aussie Swiss, Euro Swiss that one's kind of already melted. But Aussie Swiss and New Zealand Swiss, I do like both of them for sells. Prices come back into a very nice area here on New Zealand Swiss, a big level of daily/weekly support. Big level there, big level there, big level there, big level there, or reactions I should say. And of course, prices held onto that as resistance. So I'm expecting price to come back to the lows here. Essentially, like I said, before, if the trend's going to continue, you can expect us to return back to the low of the trend. Of course, where we get there or not will be up to New Zealand Swiss itself. But in terms of probability, we've got a chance of price getting there. As we can see, a pretty established bearish trend for a while. I'm simply looking for that to continue and back into that low there. So in terms of probability, you've got a good chance that NZDCHF will come back to the low there. So shorts going forward make a lot of sense. We're starting to clear out some lows as well. So possibly, if you can see another lower high there, that looks like a nice opportunity to short, retesting the daily resistance, which is this level here, and coming back into that trend line there, probably coming back into a nice FIB confluence there as well. That looks like a nice short opportunity to take advantage of. And again, depending how far you want to take the trade, you've got multiple lows here to choose from. You've got some areas over there, or you can go for the home run all the way back to the low there if you're feeling a little bit braver. But in terms of the quality of the setup, I do like the shorts here. I do like the shorts for NZDC Chef going forward. Keep an eye on NZDC Chef going forward. I think there could be some nice sells there later on. How many pips do you aim for? Again, I don't really have a consistent pip target which I aim for. I just aim for structure on the 4H time frame, and it's in reference to how much I'm risking as well. So Sometimes my targets could be potentially 60, 50, 60, 70 pips. Sometimes it's 150, sometimes it's 300 plus. So it does depend on the pair. For instance, gold has a lot more pips about it. So, compare that to your USD, there'll be a big pip difference. But it does literally depend on the structure that I'm trading and the structure that I'm trading and the levels in reference to that and my stop loss as well. So my targets for my trades can differ between 50, 60 pips to 300 plus. If my stop loss is like 80 pips, 90 pips, then for me to get a decent risk reward, I'm looking at 250, 270, 300 plus, potentially for a decent risk reward on that trade as well. So it can get quite big sometimes, but that's only typically when the market conditions are quite volatile. Maybe there's some fundamentals going on and we're seeing big moves in the market where my stop loss is very big. Other times my stop loss could be like 20, 25 pips, 30 pips potentially. So that's when I'm looking at 50, 60, 70, 80 pip targets. But yeah, it does depend on the setup. I don't have a consistent pip target. All I'm looking at is trading structure, trading price action, and wherever the pip range may be, is whatever it is. So so yeah, I always calculate my lot size before I get into the trade. So I don't have a standard lot size which I just use. It does differ, sometimes quite a lot as well, depending on the pair and the stop loss size. But in terms of my risk, it's always 1%. So it's that's consistent. That's the consistent thing. In terms of the stop loss size and the pip size, that will change. Okay, where was I? Pound AUD. Okay, we'll take a look. Bucci, what do you think about gold? Okay, we'll have a look. See. Godfrey, good morning. Love you job. Not everyone do this. I appreciate it. I appreciate it too, Godfrey. US 30, sure thing. We'll take a look. Yep, dollar yen. Max from Rwanda, big up. Nice. Whereabouts in Rwanda are you from? I'm gonna trade CPI today using buy stop, sell stop. What's your opinion? Yeah, that's not really a good idea. That's not really a good idea. Again, I've never actually done that before, but it's kind of that cliche thing where, if you've got a big news event coming out, price is trading here. If you have a buy stop here and sell stop there, eventually price is gonna trigger the buy or trigger the sell, and you're gonna make money depending on the direction. But a lot of the time, especially when the news comes out big, it will definitely take both of your orders. So if price is like here, definitely with spreads widening as well, you're likely to see your order hit to go up and your order hit to go down. Sometimes it doesn't even have to actually hit them both because the spreads will widen as well. Sometimes it will come very close but trigger you into the trade. Likewise, very close here, trigger you into the trade, and sooner or later you could be taken out of both trades. I mean, if you don't have a stop loss, then it might play out potentially. But then if you're triggered into both trades, it doesn't even matter if it does play out, because if the market does eventually choose to go down, although this trade here will be running in a profit, this trade here will be running in a loss. So it kind of balances out, and you'll be making nothing, or maybe you're losing a bit depending on spread and stuff like that. So it doesn't actually make too much sense to do it, especially with big news events, CPI, NFP, interest rates, because spreads will widen, likely to take both positions. And again, it doesn't matter where price moves. One position will be at a win, one position will be a loss. That's if you don't trade with stop loss. If you do have a stop loss, then maybe both your stop losses are triggered, which is definitely something that wouldn't be nice to experience. So I would strongly advise not to do it. If you want to do it, just open up a demo account and have fun there. Of course, spreads shouldn't be too much of a big deal, and whatever happens, you won't lose anything as well. But on the live account, with your money at stake, I would advise not to. Gaming scenario, pound yen. Okay, we'll take a look as well. William Stacy, what is up? Welcome to the stream. Hope you're well. Aaron Rivers, how many trades do you get on average a week? Again, it does differ. I'll probably say I've averaged maybe, I've probably averaged probably between 1 and 2 trades this year, I would say. Last year was a little bit more, maybe between 2 and 3, but this year has probably been 1 and 2, I would say. Because I did take a lot of trades at the start of the year, and it's kind of been on a slow decline. Maybe apart from May or June, I did take a lot of trades in that month. I think one of those 2 months. But July, August, September, didn't take many trades during those past 3 months. But yeah, I would say on average this year, between 1 and 2, between 1 and 2, so like 1.5 trades. Again, I don't know the actual number. That's just me thinking off the top of the head. It could be 2, it could be 1, it could be maybe even more than 2. I doubt it'll be more than 2. But yeah, kind of that ballpark roughly. And again, I'm a swing trader, so I'm not in the markets all the time. I'm trying to be precise with my trades and make sure that I'm trying to take advantage of the higher time frames. Confluence is coming together. So people on the lower time frames, there'll be more opportunities, more trades to take potentially per week, per day even. But for me myself, yeah, I've pretty much been averaging around 1 or 2. But again, it does definitely depend on market conditions and how the market's moving. Because the first kind of 3 months of the year is probably averaging maybe about 3 trades a week. About 3 trades a week, potentially even more as well. But as market conditions change, markets change, and characteristics of the market change, which will take things outside of my strategy, then it comes back in, and then I get more trades, and I see less trades. So it's kind of a up and down seesaw. But probably say between 1 and 2 this year. Okay, so let me go over. I did New Zealand Swiss. Let me go over pound Aussie. And then I'll take a look at dollar yen. I think I was supposed to look at dollar yen ages ago, but I will do it now. US 32, we'll take a look at US 30, pound yen as well. I will go over gold shortly. Okay, so that's Bitcoin. That is not pound AUD. So yeah, pound AUD is on my watch list coming into the week. I don't think it's going to come into my area of interest by the time I want to see it happen. Let's go take a look at my TradingView profile. Feel free to check me out on TradingView. Just search my name up and you can follow my setups there. But pound AUD, I was looking for some sells. Still am looking for some sells. Up at this area here, kind of looking for like a big head and shoulder pattern. So we've got the left shoulder here, you got the head up there, and looking at potentially a right shoulder around 1.93974. Since then, the market has kind of just been moving sideways. So I kind of want to see the market kind of break out the consolidation, go up, and then come back down. That would be very, very nice indeed. But at the moment, pound Aussie kind of just moving sideways. So I'm not really interested to do anything here. Possibly we could be forming a lower high to come back down. We don't necessarily have to do it up there, but I know that's where my confluence lies. So I'm not really too interested to do anything here at the moment. I'm waiting for price to develop to see if we can get that bigger breakout. But yeah, pound Aussie, I am bearish bias, looking for us to come back down into the lows here eventually. At the moment, we're just seeing some sideways price action. So like I said, it would be nice if price can break to the upside and then test my area to come back down again, which is what I'll be waiting for. But this could just be price forming a lower high to see a drop anyway. So if that's the case, I'm not interested. But if we do break up higher, then I'm interested. So keep an eye on this area here for pound Aussie, like 1.93400 or 1.93900. And maybe some sales could form up there. Otherwise, we're kind of just moving sideways. So I would stay away a little bit. Okay, so where was I? Pound AUD, US 30. Okay, so US 30 dollar yen we'll take a look at next. Yesterday covered gold. Anis, what was your performance last year in terms of percentage? Can you tell us if you don't want to keep it private? Yeah, I mean, last year I think I got 44%. 44% on the year. Again, I did make most of those gains at the start of the year as well. I don't know, it feels like I performed better at the start of the year, but I did most of the games at the start of the year, and then kind of the last quarter was kind of just break even pretty much. But yeah, 44% last year. And again, that for me is fantastic, to be fair, because again, I'm just trying to improve, not necessarily improve year on year, because obviously I want to improve year on year, but I understand that market conditions change. I mean, 2021 was when I started finding some rhythm, but I did learn a lot of lessons in 2021, because I started finding some good rhythm, and at the same time I did experience a lot of emotions at that point. So my trading was decent, but I knew I was making a lot of, not mistakes like not following my plan, but in terms of just trying to learn everything, I was still kind of just trying to make sure that my technical was just on a very, very good level. When I was focusing on the wrong things, I needed to focus on myself as a trader, my habits. But 2022 was a good year, kind of just me being consistent. Likewise for 2023 as well. But yeah, my main focus is kind of just making sure that in terms of my strategy, my performance, I'm kind of just slowly improving it. So if I can take less trades and attain the same percentage, then that for me is an improvement. Or if I can take the same amount of trades and make more percentage, that's an improvement as well. But that's not really the path I'm trying to go down. I'm trying to go for less trades, same percentage, because that means, like I was saying at the start of the stream, my efficiency is better, my profit factor is better, my win rate will be better, my risk of ruin will be better or not as high. Equity curve will be better, amount of drawdown experience will be better as well. So that's kind of where I'm trying to focus on improving. But yeah, I think in terms of measuring a trader, I think measuring based on the year is probably the best metric, because you got a wide range of traders out here who some perform their best trades in like a couple of months of the year, and the rest of the year they're kind of flat. Other traders are a bit more aggressive in terms of their risk percentage, so sometimes they could be making like 200% on the year, but of course their drawdown could be like 80% as well potentially, which is obviously huge, but then at the end of the day they're still making profit. So there's different ways to skin a cat at the end of the day. But for me, the most important thing is a rising equity curve, managed drawdown as well in relation to your profit, and yeah, I'd probably say those are the two most important things in reference to a trader. Because there's people out there who make great percentages, 3-figure percentages, and there's people who make like consistent 10-20%, like the guy who managed like 33 million with Darwin X. His like average percentage for the year is like 15-20%. So in terms of percentages, it may be not that crazy, but in terms of the consistency, it's very crazy, because he's averaged, I think, 15-20% for the past, I think 8 years or maybe 9 years, which is very impressive. Because if you're doing that consistently for the past 8-9 years, that means through COVID, through Russia, Ukraine. I'm pretty sure there's things before that which I can't remember right now. Different kind of world events would have happened during that time, and the fact that you're still consistent 15-20%, and again, that's on average as well. I think if you watched the Darwin X interview with on the Words of Wisdom podcast, he said that the same guy who managed 33 million, I think, was flat this year. So he hasn't really made any gains this year. But again, that's not necessarily the most important thing, Because when you're managing 33 million, the most important thing is not to lose the money, is to manage the risk. Because if a lot of people are going to trust you, put money in you, millions, multi-millions in you, you know, your number one thing is 100% manage risk, and then number two is make gains. So as long as you manage risk on the year, it doesn't really matter too much that he's flat, because there's always next year, there's always the year after that, and as long as he protected the downside, then he's all good, all Gucci. But yeah, I think the main thing is just looking at that consistency, getting more efficient. That's where my kind of head's at right now. Okay, so we'll take a look at was it US 30 next? Pound AUD. I did pound AUD, didn't I? Yes, I did. US 30 next, I believe. If I've missed out a pair, please let me know in the chat. I feel like I have, but I don't know which one it is. But I'll go to US 30, then I'll do dollar yen in a moment. Aaron Rivers, would you recommend 4H 4-hour swing trading for a new trader? Yes, of course. Appreciate it, Ennis. But yeah, of course. I mean, for a new trader, I think 4H is actually a very nice time frame. Again, it's a weird question, because I feel like with trading at the beginning anyway, I think the more the better actually. So I think actually learning on like maybe the hourly time frame, even less like the 15-minute time frame, I think that's actually a good thing. Thank you so much, Babson, for subscribing. If you guys are enjoying the channel, by the way, please be sure to drop a like and subscribe. It really does help out. Yeah, I think actually in the beginning, the more is actually the best route to go, because I feel like with trading, to accelerate your journey, accelerate your growth, you know, you need to kind of gain as much experience as possible. Because reflecting on my trading, I think, yes, I know a strategy. Yes, I have a plan. Yes, I've tested the strategy. Yes, I've collected data on it. But I think the other thing that's the most important to actually see me be profitable is definitely my experience in the market. 100% is my experience. Because if I don't know how to view the market, if I don't know how to actually analyze the market properly, and that all comes with experience, you know, then I'll be lost. Doesn't even matter if I had a good strategy or a good plan. If I give a beginner trader a good strategy and a good plan with data as well to back it up, and then you can go through the data if he wants to, yeah, I can guarantee the trader will probably still lose money. It'll probably still lose money because it's a beginner, and that's expected. So I think the best thing to do as a beginner, 4H time frame is great as well, but I think just trade not as much as possible, not like stupidly just take 100 trades a day, but just get much exposure to the market. You know, trade, lose, win, break even, learn. You know, just get stuck in and learn as much as possible. Experience is difficult because you can't just gain experience. You have to go through the time period. But yeah, I think just expose yourself to the markets. Of course, not with live capital just yet. If you're beginning, start on a demo. Don't need to lose your money straight away. But yeah, 4H time frame is good. But if you can go lower, I think an hour might be better as well. Then you can always switch for 4H later. But in terms of your routine and maybe things going on in your life, 4H is a good time frame to start as well. Anus always also getting as much capital as possible. It's important also. Yeah, bro, the one who's managing 33 million in 2018, he made 8% on the whole year. His performance are public on X. This year he's up 11%. Okay, I thought the guy said he was flat. Oh well. I'm wondering how much he is risking per trade. Maybe 0.25. Yeah, possibly. Again, if you got 33 million, you know, your number one thing is make sure, you know, don't lose the money. You know, if I'm managing 33 million, my main thought process is not necessarily don't lose the money, because of course I will go through drawdown, that's normal, but make sure that everything is managed in terms of risk, and I definitely got some risk parameters set up for everything. Because yeah, if you mess that up, then that's pretty much your reputation down the drain, really. Because if you mess that up, you know, who's going to trust you with money again, really? And there's always going to be another upcoming trader who they would rather put their money in, whereas you've already stained your record. So the number one thing is risking, make sure you're protecting your risk. Yeah, possibly 0.25, 0.5, maybe even less than 0.25 potentially per trade. But yeah, I want to, because on the stats you can see his returns, but I'd like to see how frequent he trades as well. I think he said he only trades NFP. I think in the interview he said he only trades NFP, which is really weird. You know, for all the traders I've met and viewed online as well, I've never heard a trader who only trades NFP. But I'm pretty sure that's what the guy said. I may be mistaken, but I'm pretty sure he trades NFP. Just that for the month. Yeah, I could be wrong there, but that's what I got from the interview, which is pretty crazy. Imagine just trading NFP with 33 million. And again, with 33 million, you don't have the risk. You don't have to trade a lot either. 11% on 33 million, you're making what, 3.3 million, a bit more than that. You keep 15% of that, which is like 15% of 3.3 million. Well, it's maybe like 400k, 500k maybe, which is more than enough. But yeah, I mean, just goes to show you consistency is kind of where the focus is, not necessarily how much someone can make in a given month or in a given year even. If you make crazy percentage one year, but then you go and have a massive drawdown period the next year, then that first year doesn't really count for much. So it's all about the consistency. It's all about protecting your downside, and the upside, as long as you've got a consistent plan, a consistent edge, should take care of itself. Anyway, so let me go take a look at US 30. So US 30, so we are coming into my area of interest, which is this price swing low here at 34k, we'll call it. I am looking for price to come back into this level here eventually around 32,700. So that is the plan with US 30. We just missed it not too long ago, but now we're coming back to retest some structure. I do like this level for some shorts, possibly. There's some areas up here we could test as well, but this 34k level looks very, very attractive to me. So I'm liking what I'm seeing here with US 30. Price is very consistent with the lower highs ever since we kind of broke the structure. And I'm expecting another one to form for us to come back down again. Very similar opportunity to like gold and silver. We've all had very impressive moves to the downside. Now they're kind of having pretty aggressive corrections as well. Silver as well too. US 30, S&P as well. They're all kind of looking pretty bullish. And of course, DXY being down is definitely helping that move out. But yeah, nothing's really changed in terms of the bias. Still following structure. Of course, nothing's 100%. Structure breaks. Trends can change and whatever. So nothing's 100%. But in terms of probability, I've got to be favoring sales here for US 30 going forward from a swing perspective. So I'll keep an eye on this 34 level. Again, I wouldn't say just jump straight into a trade. Make sure you're waiting for some type of confirmation. And even better if you can wait for some lower lows and lower highs to print and then getting in one of them. It will make the trade a little bit more high probability and safer as well. But yeah, I am seeing more downside here for US 30. Okay, so I will take a look at USD JPY next. I will take a look at pound yen and gold too. Huang lost 20 billion USD. Who's Huang? Is that like a fund manager? Is that like a fund manager who lost 20 billion? Because yeah, I don't think there's much coming back from that if you're losing 20 billion, especially in a fund. In April 2021, the Wall Street Journal reported Huang lost 20 billion over 10 days in late March, imposing large losses on his bankers, Nomura and Credit Suisse. Wow. Korean-born American investor and trader. Damn, that is huge. Yeah, I just had a little read up on that. Wow. Yeah, again, of course, where you do have well, you do have success stories, you've got the exact opposite. Of course, you've got people who have gone the other way. But yeah, I mean, that's why it's so important to manage risk and protect your downside. You know, getting caught up in the upside can definitely make you forget about the downside, and then the downside will show up sooner or later. So number one thing, even with managing, $100, the key thing is not necessarily flipping that $100 to whatever, because most likely 95% chance, 99% chance you will blow that sooner or later if you're going to keep flipping. But if you can protect the downside and slowly gain systematic gains on that $100, you're teaching yourself a skill set there which you can deploy on larger money. Of course, psychology will come into it, and emotions will come into it as well. But as long as you've got the skill itself, you can always look to scale that skill up. Of course, there'll be obstacles and challenges along the way, but the key thing is becoming the asset, becoming the person who can manage, who can grow capital. Once you've got that skill set, no one can take that away from you. Of course, there will still be times of difficulty ahead, 100%, but the fundamental skill is still there. It's just like kind of athletes when they're taking kind of big sporting events like penalties in football, or running a race in athletics, or whatever, high pressure events. But the skill level involved in doing it is difficult, of course, to the average person, but to an athlete who's training their whole life for it, like taking a penalty, for example, isn't necessarily too difficult to them, because they've trained for it their whole life. They've got the ability to do it. They've trained. They're practicing training as well. So in terms of taking a penalty, it's pretty straightforward, and the probability is always with the penalty taker, not with the keeper. But still, you get big situations where people blunder, penalty shootouts, sky over the bar 100 yards, and if you take that same player and you ask him to repeat the penalty in practice and training, he scores that 99 times out of 100. But the times where they sky the ball and something happens, it's mostly down to psychological pressure and the emotions coming in and thinking too hard about the situation, which is the same for us traders as well. When the money's on the line, when there's more money on the line, you scale up, that pressure will come into play. You may feel like it won't, but it definitely will. It definitely will. But anyway, for USDJPY, I've highlighted this big level of resistance that the market's come into. So with dollar yen, I'm kind of taking a break. I do like the yen pairs in general. In terms of the upside potential, a lot of them look like they're about to go bullish. And what I mean by that is come back to their swing highs, possibly see some new highs as well. But dollar yen's kind of just flirting with the idea of trying to break through this big level of resistance. And I'm not really trying to take buys back into this 150 handle. So dollar yen going forward, I can see some more upside, possibly some new highs past this point here on the left. But yeah, I wouldn't want to be looking to buy dollar yen. I wouldn't want to be looking to buy dollar yen because, like I said, we're coming into the level. There's not enough room for me to get a good risk to reward trade. So yes, I do expect more upside. We're still pretty consistent with all of these high lows here as well. And I do expect, likewise, likelihood of us doing something like this is pretty high. But I'm not seeing a good trade for me to take in terms of the risk reward, in terms of the setup either. So with dollar yen, I'm kind of just sitting on the sidelines. I'm actually waiting to see maybe if we have a reversal. I'll kind of be interested if something like that happens, and taking some shorts, retesting somewhere and taking some sells. Some counter trend opportunities could be good if that does happen. But at the moment, higher highs and higher lows are still intact. Trend's still up. If you look at the daily, the weekly, the monthly, everything is still up on the major time frames. So, it's a no-brainer for me to expect more upside in this situation. And it's just not a trade that I'm looking to take advantage of, or opportunity looking to take advantage of. I'm more focused on pound yen, and maybe a Swiss yen can retrace. That would be nice as well. The yen pairs for me looking pretty bullish going forward. What about news? Yeah, we do have CPI coming out later today, which likely will affect gold. I'll take a look at gold in a second. Again, I'm not really looking to predict anything like I did yesterday with PPI. I'm not really looking to predict anything. From a technical standpoint, I did say that I'm looking for some more dollar weakness, for some strength for later. That's kind of what happened, but again, it's nothing that I'm going to place money on. And same thing for today as well. We might see a bit more dollar weakness, then some strength later on. So that's kind of what I'm expecting going forward. By no means am I looking to trade that bias at all. Again, I'm strictly focusing on the setups that I trade, and if the setups are not there, then I'm not looking to do anything, no matter how confident I am in the news event or in my bias in general even. So with going forward with the news coming out, I'll take a look at gold in a second, but I have generally no idea what's going to happen until it happens. And quite frankly, that's what's quite nice about being a technical trader, because you don't have to get caught up with the news, and when it does happen, all you have to do is just react to what's happened. Has price broken structure? Has price done this? Has done that? Okay, what's your next move? And then hey presto, you continue with your day. In terms of expecting what the news is going to do, I'll just see what happens and then react to it. Pocket change. I mean, that's quite a big pocket. If 10 billion is just pocket change. No, not 10 billion. It's 20 billion. Actually, I thought it was 10. But the massive portfolio had created so quickly that its losses blew through the small buffer as well as its capital. Tried to manipulate these stocks as high as they could go. Yeah, exactly. So his greed took control. He tried to expect the stocks to keep going up and up and up, and then it didn't. Oh, he actually went to prison as well, knowing that the inevitable end was losing all his money. So he knew he was all in as well. So yeah, is that kind of rare, because of course for him to be managing he's actually managing more than 20 billion at the time. But for him to be managing that amount of money, he has to have a very trustworthy track record. He has to have established connections. So he wouldn't just be a random guy that they just said, yeah, go manage this money. He's a very credible person to be able to be in that situation. But it just goes to show you that even the most credible people, the most esteemed people, can even slip up and have such a big downfall, because he got very, very greedy. He kind of over-leveraged himself to exposing all 20 billion to the market. And it says he knew the inevitable would happen. If the stocks didn't keep going up, he would lose everything if they reversed. And he lost all his money, and he went to prison, actually. Which is crazy. He went to jail. Damn. But yeah, that's definitely the ugly side of it. The ugly side of trading. Anyway, on a brighter note, let's go take a look at gold. Okay, so yeah, I was supposed to look at GJ, wasn't I? We'll take a look at gold and then GJ. Gold sell 1881, okay. 1881 is a nice sell entry. What's more important to you when entering trade, daily, 4H or hourly? Good question. I think they're all important to me in their own right. I wouldn't say one is more important than the other. I use the hourly for my actually entry confirmations. So in terms of
The importance of the hourly is very, very important, and there needs to be a good entry signal for me to take the trade. In terms of the 4H, there needs to actually be a setup, and then there needs to be a set of confluences which I'm trading, so that's very important. And the daily time frame, I'll probably say it's the least important, but I would argue no, it's not, because I still need to understand what the higher time frames are doing to know the context of the market. Am I going counter trend? Am I going pro trend? Am I into a daily level, key level? Or am I trading away from a daily key level? So all of those factors are very, very important for the trade as well. But if I had to pick one, I'd probably say the daily, but I need to understand the daily bias for the context of the market, because the setups I trade on their own, are just kind of regular setups, but applied with a lot of confluence, especially high time frame confluence, you can turn into very, very nice rewarding setups, especially if you can time it well with the daily chart. You can really increase your risk to rewards if you're trying to target daily swing highs and daily swing lows as well. So the system will always be 10 times better if you're doing it in line with the higher time frames. But I need the hourly to enter, and I need the 4H for my confluences. So I would argue the 4H and the hourly is the most important, because that's what defines the setup, defines my entry. Daily and higher kind of just put the context in the market, understand the overall direction as well. So that's kind of what my stance would be. But I need all of them to make sure I'm taking good quality position. Anyway, so gold, someone said they're short from 1881. Nice entry or something. Let me mark that on the chart. There we go. 1881. That's more or less there. So, okay, so you're talking about the bearish engulfing. I doubt you're talking about that, because that happened about 3 hours ago, or 2.5 hours ago anyway. So you just, what time frame have you gone short? What time frame did you sell gold? 1881 is a nice sell entry. I'm not quite seeing that. Maybe if I go down to the 15. Yeah, everything is looking very, very bullish for me on gold right now. I'm not really seeing what's so crazy about 1881. It's already coming to an area of importance or significance in my book anyway, according to the way I trade. So yeah, I'm not really seeing much significance about current price right now. There's still a lot of bullish momentum. Not really seeing much rejection at that 1881 price. There's a nice level just not too far above it that I think there's a good likelihood price will test. And especially with price about to experience some news in the next 2 hours, unless you're going for a quick scalp, you're likely to be holding the trade through the news as well. I think it's just going to be a very difficult situation to trade gold at the moment. I think you're much better off waiting for the news to happen, seeing what happens, then maybe looking for some trades after that, if there is some trades. Because yeah, at the moment everything's still bullish. I wouldn't be surprised if price is going to take out that high there and push forward. We've got news as well, which could help it out. We've got a big zone here which the market could be attracted to too. So yeah, I don't think of course, if you've got a plan in place and you got a trade that you've tested here and that kind of fits that plan, then by all means see out the trade, do what you need to do. But of course, if you're asking for my opinion, I would say gold still has a little bit of room to the upside, and even if it doesn't make that move, there's not much in that current price at 1881 telling me that we're likely to sell off. Again, it's probability at the end of the day we could sell off from anywhere, but there's just not a lot saying that we will. So yeah, I'm not quite convinced at this 1881 area at the moment. Okay, Euro USD. Have I looked at Euro USD? I don't think I have. We'll take a look at Euro. I'll go through Pound Yen first before I forget. Aussie CAD as well. We'll take a look at gaming scenario. I'll go through those couple pairs. Now we'll take a look at Euro USD. Kendrick, are daily zones hard to trade in the 4H setup? Those zones give too many fake moves. What do you do on those strong levels, bro? Good question. So yeah, if you're going to look at higher time frame level, you don't want to trade them just purely on lower time frame candlesticks. Normally it's a recipe for disaster. If you've got a big zone like this, and you're watching the lower time frames come into the zone. If you're just going to take a bearish engulfing just because prices test that zone, the likelihood that you're going to catch it perfectly is very, very low, because this is a big zone. You could see some wicks on the higher time frames. Market might want to break through a little bit, and it might look like a breakout on the lower time frame, but it just turns out to be a wick on the daily chart, and then eventually we do sell off. So trying to time it on the lower time frame is very, very difficult to do. To kind of mitigate against that, to fight against that, what you want to be doing is waiting for the market to come into that area, and then wait for the market to start trending away. Then this is where you find good high quality positions. So in terms of the setup, you're actually still trading on the lower time frame structure. So for example, if this is a daily zone here, if this is the daily zone here, and this price action is the 4H, and what you actually are trading is a 4H level. Excuse the handwriting, but what you actually are trading is the 4H level here, but you're trading away from the daily level. So price is rejecting the daily level here, but in terms of your entry and your stop loss, it's based on the 4H. It's based on the 4H level, which means that number one, your risk reward will be a lot better as well, because you don't have to put your stop loss all the way above the zone. And number two, in terms of the clarity and the what's the word? In terms of the probability of the setup, it makes a lot more sense taking this trade, because actually looking to follow that bearish trend, and you're not trying to time it perfectly on a zone. Because again, when you got big zones in the market, for example, this is a 4H level of support. If I was to scale down to like the 15-minute chart, and it'd be difficult to perfectly time this level. It'd be difficult to perfectly time. You can see the market comes up, retest it again, retest it again, retest it again, before then it continues to the upside. So, retesting some structure like this, and on the 15 and trading from there, we can see that broke that time, but essentially will eventually retest and hold. It'll make a lot more sense to take those type of trades there, and then you can always look to hold the trade longer and take advantage of the risk reward from using high time frame levels. But it's always difficult when you're trading such a big zone and you're scaling down to lower time frames, especially like daily and like the hourly or something like that. It's a big contrast. But waiting for the market to start giving you a bit of a trend, it makes so much more sense to take trades. So that's kind of how I tackle it. And I hopefully that answers your question. Just expose my awful handwriting there. Anyway, so I'll go through Aussie CAD. I'll go for GJ first, and then I'll go for Aussie CAD and Euro USD as well. To go buy gold or home. I can't see because or go home. Buy gold or go home. Yeah, I mean that's one way to do it. That's definitely one way to do it. Okay, so pound yen, like I said, I do like the buys for pound yen. I'm looking at this being the next higher low in context with the higher time frames. So we've got a higher low there potentially, and looking for us to come back to the highs there on the weekly chart for all of these wicks. So that's what I'm looking at for pound yen. Come back and retest 185, 186, possibly some new highs as well. So pound yen has recently just broken through some structure here on the left, which is what I like to see. Breaking through that high, giving us a new high. So I'm looking at another higher low forming, maybe retesting the high, maybe might come a bit deeper. But essentially I'm looking at us coming back to retest that big level of resistance sooner or later. So pound yen, I do see more upside to this one. Like I said with the other yen pairs, everything's looking or starting to look pretty bullish with the yen pairs. So I'm expecting more upside with them. Pound yen, no different as well. So yeah, keep an eye on 183. We just had a nice breakout of that. I think some nice clean retest of that. Seeing the next higher low, 1, 2, 3. Looks like a good trade to me. And yeah, there's some nice targets to aim for up there as well. So going forward, pound yen, I do see a lot more upside with that particular market. Aussie CAD, still looking to see if this one can break to the upside. It's been very, very corrective for the past few days. We're kind of consolidating between this level of resistance and this trend line. So as you can see, the market is consistent with the higher lows, yes, but not really creating higher highs. So we need price to actually commit in one direction, whether it's going to be a breakout to the upside, that would be nice, or a break to the downside, that would be nice as well. and we can trade it respectively. At the moment, it's kind of just hard to tell where price is going to go with Aussie CAD. Higher time frames are still pretty bearish, so the trend is still down, so we could easily still break down. But if we do break for that resistance, I do think we get a nice counter trend setup. Market has been forming higher lows pretty consistently, so if we can break through that high, probably trade it to the left here, or this high here as well. Those are some nice targets to aim for if we do break higher. But at the moment in time, it's difficult to say what the next move will be, just because it's so 50-50 at the moment. The market is respecting resistance just as well as respecting those higher lows. So with Aussie CAD, I'll strongly suggest waiting for a breakout, whether to the downside or to the upside, and then we can look to study price action a little bit better and start to formulate actual setups. But for now, it's just very speculative as what the next move is going to be. So yeah, AUD CAD, I am waiting for a breakout, but yeah, nothing to do at the moment. Okay, so where was I? Okay, so I had a look at AUD CAD. Okay, Euro USD is something I said I'll look at next, didn't I? Yes, I did. William Stacy, are you still a dollar bull, Miko? Yes, I am. Longer term, though. Longer term, I'm still a dollar bull. I wouldn't necessarily look to buy it now. I think I'll see what happens with CPI. Because again, I'm a dollar bull in terms of my bias, but in terms of actually looking to buy and trade that bias, I need a setup that actually fits my criteria to form, which just hasn't formed yet. So it doesn't matter if I'm a dollar bull or a dollar bear at the moment. If there's no setup for me to trade, there's no setup for me to trade. But yes, I am a dollar bull. I do think most likely dollar will keep pushing higher. I do think the downside we've seen over the past week or so has just been a correction. So I'm still looking for dollar to keep pushing higher, but I'm waiting for a setup to form for me to actually trade, and maybe CPI can give me that. Possibly, we'll see. But yes, I am still a dollar bull. Tuco, how much screen time do you give to trading, and also how much other than trading? Trying to cut down my screen time in general. Good. I mean, that's something I'm trying to work as well, to cut my screen time down in general. But yeah, in terms of actual trading, if you kind of exclude the streams and maybe creating content for YouTube as well, because that's technically looking at the charts too. But if you kind of don't look at that, my screen time in terms of trading probably equates to, if I sum it all up, probably equates to maybe about an hour, 15 minutes a day. It's no more than that. I spend about 20 minutes in the morning seeing what's happened yesterday in terms of the Asian session, and kind of just setting myself a plan for the day in terms of my watch list. That takes like 15-20 minutes max, if that. And then I check the market every hour on the hourly close, because that's when I take my trades. I look at the charts like 5-10 minutes before, see if there's any potential setups forming. If there isn't, I go about my day, come back the next hour. I do that till 5 p.m. So if you kind of add that up, it probably equates to about an hour 15 minutes potentially. If I'm in like maybe 1 or 2 trades, maybe I've got to manage some trades as well, I'll set alerts. Maybe it might go up an extra 5-10 minutes, but it would be no more than 90 minutes a day, no more than an hour and a half a day in terms of just my personal trading analysis and trading included. Again, most of my analysis is done on the weekend, so I do spend like 2-3 hours on the weekend just analyzing for the next week, because of course I do have quite a lot of markets that I look at, so that does take some time to go through. So luckily for me, I can just do all that on the weekend. So a lot of my analysis during the week is just kind of just staying up to date with new candlesticks, new information. So it doesn't really take me too long, 15-20 minutes in the morning max. So yeah, about an hour to an hour and a half, depending on how active I am in the markets. In terms of my screen time outside of that, I definitely am trying to cut it down. But again, a lot of my work is based on the screens on the laptop. So, or my computer, I should say. So it is probably a lot. I need to check my screen time. I don't know if it's recorded on my computer or not. It's probably a lot. Maybe like, I don't know. It could be maybe like more than like 8-10 hours a day, maybe around there, maybe more, to be fair. I'm not too sure actually, but yeah, that's definitely something that I do want to cut down as well. But it's a bad habit. But in terms of trading, I'll probably say between the 90 to a 60-minute window. Anyway, so Euro USD I'll take a look at. Aussie Swiss, okay, sure thing. Nice 4H resistance. Do you think CPI will affect it? Most likely CPI affect. The CPI will affect all markets. Dollar kind of is like the governing currency of the world reserve currency. So whatever kind of happens to the dollar does tend to affect other markets as well. So we're likely to see some type of reaction, even with Aussie Swiss as well. What is your perfect entry? Again, don't really have a perfect entry, but I have good entries, which are bullish, bearish, engulfing candles on my areas of confluence in favor of the higher time frame trend. Those are kind of what I'm looking for my quote unquote perfect entries, or good entries, I should say. But yeah, I'm looking for bullish, bearish, engulfing candles with some wicks, rook rejections. I do have a video. If you go through my Forex education playlist, I do have a video talking about my entries. Barat traders, what's up? Not follow proper level Forex. I don't know what that is. Pound USD, Anas will take a look, no problem. Sell Exa. You can have a weird questions. When do you sleep? When do you wake up? And what do you take in breakfast? You have a lot of energy. I love it. Do I? I've got a lot of energy. A lot of people say that that I'm very, very calm, very chill. Not a lot. Don't have a lot of energy. But yeah, in terms of my bedtime, I'm normally asleep by 11:30, 12, and I'm normally up 7. Sometimes if I sleep in 7:15, 7:20 a.m. But yeah, in terms of my sleep, it's kind of 12-7, so nice little 7 hours there. But yeah, that's for weekdays. Weekends sometimes could be 9 a.m, maybe 10 if I'm feeling a little bit naughty. But yeah, normally 7 hours of sleep during the week. And in terms of my breakfast, it depends. Sometimes I have Weetabix. Sometimes I have salmon bread and some eggs as well. A bit of avocado here. But yeah, that's kind of what my breakfast is most of the time. But yeah, appreciate the questions. I've lost $300 in the last day. That's not ideal. Again, as we kind of talked a lot about on the stream here, manage the risk is the most important thing. Sometimes you do have to burn yourself a little bit to realize not to stick your hand in the fire. And I would say kind of use this loss. I don't know, again, because if you have, it depends, $300 could be 1% of your account, or it could be 90% of your account. So it's not necessarily the dollar amount is the worst thing in the world, because it depends on your capital that you're trading with. But it sounds like it's of a bigger loss than it should have been. So if that's the case, use this as an opportunity, use this as a learning curve to not burn yourself again. And I was talking about this the other day. Sometimes you just have to burn yourself to realize not to over risk, over leverage, overexpose yourself to the markets. You can tell a beginning trader who's got a lot of potential, who's picking up everything very, very quickly and seeing some good results very quickly. Make sure you keep your risk small, consistent. But, when you get that success, when you start to get some positive results, you always think, if I'm risking 1% a trade and I'm seeing, these results, I risk 2% of a trade, I'll see double the results, 3%, 4%, so on and so forth. Why not risk 5%? I'm really doing good now. Let me risk more. Most of the time, it normally comes back to bite them in the hand. So, yeah, use this as fuel to the fire to make sure you keep to your plan, keep risking the same amount as you should be, and staying disciplined. But yeah, you won't be the first person to lose $300, and you 100% won't be the last. Okay, so where was I? Euro USD. So yeah, Euro going forward, we have just about come onto a very nice level here of broken support, big move to the upside. Now price has come back to retest the underside of that level. So going forward, I am pretty bearish with Euro. Likewise with the DXY, I'm still looking at us coming back to the low here, 1.04505. So I do see more downside into this level sooner or later. Again, in terms of the setup, I'm kind of just staying on my toes here. I'm kind of just waiting for the market to invite me into the trade, invite me into the setup. Like I just mentioned, I do have my bias. It's already cemented in the market. Of course, my bias could still be wrong as well. It's not like I just know where the market's going. I know in terms of probability where it could go. But again, I could be wrong. The market could just explode to the upside. And of course, if that happens, no love's lost. I'm going to reanalyze the market and go from there as well. But at the moment, in terms of the structures, in terms of the high time frames, I do expect the market to come back to the lows here. So now I'm just waiting for the market to invite me into the trade, invite me into the market in terms of providing me an actual setup which fits my plan for me to actually execute and take the trade. So when I see that, that's when I look to take trades. But essentially what I'm looking for is price to hold this area, start giving me some lower lows and some lower highs, and then start, what's going on here? And then start to look some trades based on that. So that's kind of what I'm waiting for Euro USD, and then I'll take some positions accordingly. At the moment, there's just nothing for me to do here. It's testing a nice level, yes, but of course, the setup's the real thing, what I'm looking at. But yeah, that's kind of the plan going forward with Euro. If we can hold this level here, 1.065, big low. If we start breaking through, there are some other areas I'm considering as well, but we are pretty far away from that, so there might be some nice buys in the meantime. But of course, if that does happen, I'll reassess and make new adjustments to my trading, which of course is a big part of trading, having that bias. But then if things go south, not necessarily south, but if things don't play out as you expected it to, what's your next move, what's your next plan? And that's something I'm doing all the time with trading, all the time. Okay, so there was a couple pairs I was supposed to get through. Just did Euro USD. Which pairs ourselves we can take a look at next? Aussie Swiss, okay, and Pound USD. I'm pretty sure some requested. Yeah, Pound USD. I'll take a look at too. No problemo. Dollar yen. What's your take? Yeah, we'll take a look at dollar yen in a moment. Any side hustles or trading your main income? Yeah, trading by main income, but I'm definitely looking at increasing incomes across the board. Okay, so Pound USD, but before that, I did say I'll take a look at Aussie Swiss. So yeah, Aussie Swiss is actually my favorite Swiss pair at the moment. I'm liking the momentum what I'm seeing here. Price is just rejected at a very, very nice level. Very nice level. This is similar to NZCHF, which we looked at not too long ago, but I prefer this one a lot better. As I've said before, price isn't taking out the low here, whereas NZCHF, we have taken out the low, so liquidity has been taken there. So not the biggest fan of selling just after we taking out such a big low. I think this is the all-time low, if I'm not mistaken. Yes, it is. So it's the all-time low. So it's just a bit of a sensitive region there for New Zealand Swiss, but Aussie Swiss, this again is the all-time low, but we haven't taken it out yet. So we still have an incentive to keep moving lower. So I'm really liking the shorts here for Aussie Swiss going forward. And yeah, now we've had a very nice rejection of that level there. The market is still a little bit choppy, I can't lie. So I'm just waiting for my opportunity to strike. But essentially, I'm looking at price coming all the way back to the low here, and then all the way back to the low here. So there's a lot of room to the downside for Aussie Swiss. So I'm not necessarily just eager to jump straight into the trade. There will be most likely an opportunity for me to get into a nice position. All I have to do is be patient for that to form. But it does look like we are breaking structure, clear out the lows now. So I'm actually just waiting for the market to go and do that, pull back on us, and then yeah, take some trades to the downside. maybe I retest some structure there. It's not particularly clear right now, kind of just making up as I go along, but yeah, I need some pullbacks, some bigger pullbacks, and then I'll start looking at some opportunities. But yeah, essentially looking at this low here, 0.56, and eventually 0.53 down at the all-time low. But yeah, Aussie Swiss, I do like a lot. It's a very similar opportunity to Aussie dollar. Aussie dollar is a bit more choppy, but Aussie dollar, I'm looking at price coming into the low here, 0.62. And again, Aussie Swiss, Aussie dollar, similar pairs. Looks like we are starting to print some lower highs here, which is nice to see. And then yeah, expecting that move happen. So we'll definitely keep an eye. Excuse me. Definitely keep an eye on Aussie Swiss and quite a few Aussie pairs actually in general. Okay, so you meant support. Aussie Swiss is a nice area of 4H support. Do you think CPI will affect it? Yeah, so I'm definitely not looking to buy Aussie Swiss. I'm not too sure what support you're talking about. Is it this area? It looks like price is kind of breaking through. Maybe this area down here, possibly might see a reaction there. But like I said, based on the higher time frames, based on the higher time frame trend, I'm very bearish on Aussie Swiss. As we can see the trend here, you know, the market has been giving us lower lows and lower highs for quite a while now. So I am expecting this to continue back to the lows there. So I'm definitely very much a bear in the market for Aussie Swiss. Therefore, I'm not really looking to take any buys. Of course, there will be opportunities for buys, but in terms of looking to follow the swing trade, follow the high time frame trend, you're going to have a lot more luck selling than buying. So I'm just waiting for a good buy setup. But yeah, I'm not quite seeing the support you're talking about. Maybe it's this level here. It looks like we're kind of cracking through that a little bit. And if it's that area, we're not quite there yet. Maybe this area here you're talking about, potentially. But again, I'm not a big fan of buying Aussie Swiss at the moment. Okay, so we'll take a look at pound USD. How do you know I don't like coffee? Sell Exa. Have I said that before on the stream? Or is that just a guess? Because I didn't mention I drank coffee when I was explaining my morning. But yeah, I do not like coffee. I like the smell of coffee, which is kind of ironic because I like the smell of coffee, but I don't like coffee drinking it itself. It just tastes weird. So yeah, I've never finished a cup of coffee in my life. I've definitely tasted it, but I don't like it. But yeah, I do not drink coffee. Okay, so where is GU? Okay, so yeah, pound USD as well has come into a significant area. It's quite funny how Euro USD and pound USD come into a big daily levels at the same time with CPI coming out. You know, it's kind of a coincidence, or maybe not. But yeah, pound USD and euro have both come into some key areas where likely would see some type of reaction here. Of course, CPI is going to do its thing. There is still room to the upside if pound USD wants to have a deeper retracement. But essentially, my analysis for euro, my analysis for pound are very similar. Still looking for us to come back into this 1.19 area. And yeah, I'm looking for some shorts down into that particular level. So I'm kind of waiting for GU to start giving me some bearish structure for some sales. You can see how corrective we are with this move to the upside with pound USD. It's just very corrective, and most likely we're actually going to break to the downside rather than keep moving up. So I'm waiting to see how we're going to set up for the rest of the day. I will be covering the CPI news over on Trading Nick's channel, so feel free to go and check out that stream when it does start, which will be like 1:15 or something like that. But I will be live with those guys later today. So if you do want to see more of my analysis or more of my lovely voice, make sure you go check out that stream later on. But yeah, going forward, I am looking at some more downside here with pound USD, likewise with euro USD. Again, with the dollar pairs, my analysis is pretty straightforward. It's the same for all of them. Euro I'm expecting down, Aussie dollar I'm expecting down, pound I'm expecting down, New Zealand dollar I'm expecting down, Dollar Swiss expecting up eventually. I don't think it's quite coming to the area just yet, but when it does, I'm expecting up. Dollar CAD, I'm expecting up as well. This one too, not really in an area of interest, but if it does tag the area, I'm expecting up, and dollar yen, I'm expecting up as well. So you can see pretty consistent across the board in terms of dollar strength. I am pretty consistent with that in terms of my buys. Of course, I could be completely wrong, and if I'm wrong, I'm wrong on all dollar pairs essentially. Again, I don't have any trades at the moment, so it's not really going to affect me at all, really, because if I am wrong, I'll reanalyze and readjust my buys if I need to. But yeah, I'm still a big fan of dollar strength going forward. So I'm just waiting for my opportunity to strike. And again, I'm not planning to trade all these dollar pairs, just whichever gives me the best setup. Likewise, gold and silver are kind of throwing that same kind of pool as well. More dollar pairs, expecting more downside for silver, expecting more downside for gold as well, coming to some key areas too. And DXY as well, coming to a big level as well, and I'm expecting upside. And same with the indices, US 30. I'm expecting downside too. So for me, across the board, dollar looks pretty strong. And all I'm doing is just anticipating that the correction we've seen, the downside move we've seen over the past few days is just most likely a correction for the market to keep going up. So yeah, that's kind of where I'm standing here going into the CPI news. Okay, gold. I will quickly go over that one. Hopefully that makes sense on pound USD, by the way. I'm not a psychic. It was just a question. There's no question mark there. It's just you don't like coffee. So I thought you just a statement there. But yeah, I do not like coffee. Okay, so yeah, we are coming to the end of the stream. My kind of watch list going forward to the end of the week is pretty much surrounding the dollar pairs. I'm also keeping an eye on some other pairs like Aussie CAD, Pound AUD as well. I'm keeping an eye on Pound Yen, Swiss Yen too. I do like those pairs as well, and I will keep you updated if I do get into any positions. But over the past kind of couple of weeks, my main focus has been the dollar pairs. Haven't placed a trade yet on them because I haven't got a setup yet. But yeah, we're coming up to some areas where I do think we're starting to form some lower highs or higher lows for maybe like dollar CAD and dollar Swiss. And it could be coming up to a pivotal point. So we'll be waiting for some opportunities to present themselves. I think silver's the most likely out of all of them at the moment. Of course, things can change pretty quickly, but I do really like silver shorts going forward. So I'll definitely focus on silver if I can get a test of this zone and some shorts. And I like dollar CAD as well. But at the moment, nowhere near my area of interest. Maybe we might fake lower with the news, then push higher, or we could just rocket higher anyway. We shall see. 88 is your sell target on gold. Okay, we'll take a look. Thank you so much, Sculpey TFX, for coming onto the stream. Appreciate it, bro. So gold. Where is 1888? Okay, so you're basically talking about the zone there. Yeah, it's pretty much where I'm looking to sell from. Or at least anticipate price potentially selling off, but not actually looking to sell from. I'm still waiting for price to start giving me some low lows and low highs first, and then I'll consider shorting. So I'm not looking for price just to get there and then short suddenly. But if price can start to give me some good rejection, some lower highs there, and that's your setup that fits my plan, then yes, I will look to short around that vicinity, maybe a little bit lower, could be a lot lower depending where it forms, but that's what I'm expecting the market to give us a new lower high. But of course, price action has to back up there. We're not quite there yet. So definitely keep an eye out for that. But going forward, I'll keep an eye on the dollar pairs, especially in the CPI. Like I said, I will be live with Trader Nick in probably about an hour and a half. So if you guys are free, feel free to check out that stream. I'll leave a link to that in my Telegram. But yeah, my main focus will still be looking to take a bunch of dollar strength and short the dollar pairs. But yeah, guys, we have made it to the end of the stream. I appreciate everyone coming onto the stream, showing some love. If you have enjoyed it, please be sure to drop a like and subscribe. It really does help out the stream. I really do appreciate it. Thank you to Anus as well for moderating the stream. We do appreciate it as well, bro. But yeah, guys, thank you so much for coming onto the stream. Like I said, I will drop, well, the link is already there, but if I do get any setups, I will drop it in the Telegram. I will also drop the link to the Trading Next stream in the Telegram as well, which I'll be live on in about an hour and a half or something. So make sure you're there for that. But guys, thanks so much for coming to the stream. If you are looking for a broker, I do have my affiliate link to IC Markets at the top of the chat. Feel free to check out IC Markets if you want to, using the link if you want to. But yeah, guys, thank you so much for coming to the stream, and I'll catch you all, if not in an hour, I'll catch you all next week.